Okay, hello everybody. My name is Richard Moglen, for those of you who don't know me. And today I'm going to be talking about identifying market leadership, finding those stocks that could be the leaders of the next uptrend. And this is a presentation for the district IBD Meetup, and this is my first presentation, so let's make it a good one. Feel free to kind of write down any questions, and we'll have time for a Q&A at the end. So first things first, a little bit about my background. I graduated with a mechanical engineering undergrad in 2020. I know it says graduate there, that's just a typo. And now I'm currently pursuing my master's there at this point. And how I kind of got into investing was I took a class at the University of Maryland taught by Dr. Eric Wish called Introduction to the Stock Market and Technical Analysis. And I loved it. I fell in love with CANSLIM, technical analysis, fundamental analysis, and I was actually his TA for the next few semesters. And then in 2019, I decided to start my YouTube channel after taking that class that first semester to try to kind of pass on what I've learned in that class. And I make tutorial videos. I have interviews with some great traders, Jim Ropel, Oliver Keld, the US Investing Champion of 2020. I finished with a performance of 941%, insane. Patrick Walker, a great educator, Kathy Donnelly, just some great CANSLIM traders. And I love doing those interviews. I learned something new from every single one. I also went to the Market Intervening Master Trader Program in 2020, learned a ton there. And right now I'm just trying to learn more every single day and with every single trade. So that's a little bit about me. And now let's move on to the agenda. We're going to be talking about first the kind of fundamentals of leadership stocks and how to screen for them. Then we'll move on to the technical characteristics of those leadership stocks. And then we'll talk about a few different case studies of recent charts that really exemplify a lot of the stuff that I look for. And then we'll have that Q&A at the very end. So let's get into it. And let's start with two quotes that I think kind of sum up this presentation very, very well. The first one is from William O'Neill, who I'm sure all of you guys know. And it is the number one market leader is not the largest company or the one with the most recognized brand name. It's the one with the best quarterly and annual earnings growth, return on equity, profit margins, sales growth, and price action. And then we've also got one over here from Nicholas Darvas, who is kind of one of my kind of favorite authors. And he said, I try to detect those stocks that resisted the decline. I reasoned that if they could swim against the stream, they were the ones that would advance the most rapidly when the current changed. So you've got kind of two stock market wizards here talking about kind of what I'm going to be discussing in this presentation, identifying the market leadership, the stocks that can really go on and perform well during a stock market uptrend. So first things first, a quick disclaimer. I and the rest of the Meetup leaders are amateurs. Please consult a financial advisor before entering into the stock market. It is risky, and always practice good risk management. And with that said, if you do want to give me any kind of feedback, please feel free to reach out to me on Twitter at richardlmoglen or at the group's Meetup site. And also go ahead and check out my YouTube channel, which is youtube.com/richardlmoglen. So starting things off, there are kind of two sides of the coin, how I see it when it comes to market leadership. First, there's fundamentals. You want to see great earnings surprises during those reports. You want to see great sales growth, margins, future estimates for annual earnings, fund ownership, and you want to be kind of part of a leadership group. So you don't want just that stock to be doing well. You want it to be doing well because an overall group, computer software, auto manufacturers, because that overall group is doing really, really well. And this stock is just kind of riding the trend in that kind of in that group. And then of course you need a story behind it. A stock isn't going to increase 300, 500% without a good story. So this is incredibly important. And all this doesn't really matter unless it shows up in the price action in the technicals. And what I look for are stocks in overall long-term uptrends showing relative strength characteristics. I want to see a ton of accumulation signs, which we'll get into. I want to see gap ups on volume. And I want to see performance trend above all those key moving averages. So starting things off, I want to talk about quarterly earnings. And overall, I want to see greater than 50%, the most recent quarterly earnings. And this is a MarketSmith chart of apps, which I think is an excellent example for a lot of these different fundamental characteristics. Down here in this red box here, you've got the last 4 quarters of earnings growth, 67%, 160%, 200%, and then most recently 320%. So huge growth. really stands out on the page. And this is what drives the stock up 200, 300, 400% in a very, very short amount of time. So that is quarterly earnings. I like greater than 50%, but obviously the higher, the better. And if you can see earnings surprises, that's even better. And what I mean by that is before an earnings report, Wall Street and all the different analysts will have a kind of expectation for the company. And when a company outperforms and there's an earnings surprise where they beat the estimates, that can create kind of a huge opportunity, which often leads to an earnings gap up on volume, like what we just saw with apps. Because they beat, it caught all the funds and institutions by surprise, and they have to buy shares the next day because they want to invest in this future leader. So this is what happened with apps. Recently, the market has been pretty poor, which is why it decreased, but we also saw some previous gap ups all the way back in August and in November as well. So that's a very important thing, earnings surprises that can lead to these huge earnings gap ups, which can ultimately start a very strong uptrend. Moving on, we've got sales growth, which is also down here in MarketSmith. Apps, once again, standout numbers, acceleration, 4 straight quarters, last quarter sales up 146%. And this just kind of supports the earnings and kind of shows that the earnings growth isn't just because they're cutting costs in research and development. Instead, they're selling more products, and that is what's causing the earnings growth. And I like over the 50% the most recent quarter, but obviously, once again, the higher the better. If a stock has standout sales growth over 100% for 4 straight quarters, that's really going to also boost the stock's price. And we saw that with Livongo. I think before its first profitable quarter, it had 4 straight quarters of sales growth over 100%. And you can screen for that very easily in MarketSmith. Next up, I think, which is very important, is margins. And I like over 10% the most recent quarter. And this, once again, is showing you that the company isn't just increasing its earnings based off cutting costs and kind of sacrificing short-term gains for long-term gains. Instead, they're becoming a more efficient business, and margins here, especially margins acceleration, really kind of increases that wow factor. And if you see acceleration in earnings, sales, and margins, like what we're seeing here with apps, that is a stock you really have to pay attention to, and one that should definitely be on your watch list, and you're looking for a point to basically get into that stock. So another piece of the pie is future estimates for annual earnings. You can see that over here on the upper left-hand side in this red box. And once again, I like greater than 50%, but the higher the better. You can see here apps for 2021 has expected earnings growth of 240%. And in 2022, a further 38%. This is fantastic. But once again, the higher the better. And the green triangles here mean that the most recent revisions by analysts have been upwards. So this is always a good thing to look for. This is once again kind of catching the analysts and funds and institutions by surprise. So you want to see this, especially after a strong quarter. So that is earnings estimates. And I also want to see increasing fund ownership, which is over here on the right-hand side. If you don't see this panel on MarketSmith, you can click this great toolbar here. It'll bring this out. And you can see for apps, it increased from 43 funds in March of 2019 all the way up to 390 funds, a huge, huge increase there. And that is really what led to this increase. It wasn't retail traders buying and accumulating shares. It was the big money, big institutions soaking up all that supply. So any bit of increased demand from either other funds or retail traders drove up the stock's price. And then you also want to make sure that the fund ownership also has some quality funds in here. And I think IBD does a great job here in MarketSmith by highlighting kind of their mutual funds that have had a very strong long-term track records. And I always like to see at least one of these funds invest into a stock, but obviously the more the better. And this is actually a little bit low for just seeing one fund. I would like to see 3 or 4 ideally.
That's a new feature.
That was a great recent addition. I'd love to see them kind of each quarter kind of show how much increase in fund ownership. I think that'd be really cool from those top funds, but we'll see if they put that in.
Do you know about 0 MUTI on MarketSmith?
Yep. So if you enter that up in here, that will bring up the mutual funds, I believe.
Yep.
Yep.
The entire list. Yeah.
Yeah, that's a great feature as well. So the next piece I want to talk about was focusing on the top leadership group. So as I mentioned earlier, you don't want the stock you're looking at to be the only stock in that group doing well, because that means it's kind of an outlier. Basically, a whole bunch of the performance of one stock is correlated to the overall group that's in. So if the overall group is doing well, that's going to boost the stock even more. And here I've got a list of all the industry groups ranked by IBD. And you can see energy alternative / other is number 1 at this point. Solar is still up there at number 4. You can see their group ranks last week, 3 months ago, and 6 months ago. So in general, you just want to be kind of focusing on these top 10 or so groups here, although I kind of restrict myself to the top 40, top 20 ideally. And then lastly, we've got the story, as I mentioned earlier. How does the stock and its product change how we will work, live, or play? How many people does the product reach? What is the moat of the company? Is the market growing? Is it disruptive technology? Do I have personal experience with the product or service? Is it a verb like Uber or Zoom? And also, is the product or service a status symbol like I'll Uber? Well, not that, that's a verb, but is it a status symbol like Apple with the iPhone? Everybody wants it because everybody else and their friend also has that product. So that's what I kind of mean by a status symbol. And we're kind of getting there with Peloton. Everybody's on Twitter talking about how they've just finished this workout. Everybody's seeing everybody else post about it. So that's what I kind of mean by a status symbol. So here are some example leadership screens that I've kind of built up quickly in MarketSmith. The first one is for future estimates. I want the earnings percent change last quarter to be greater than 50%. Earnings estimates for the current year to be greater than 25, next year greater than 25, average daily dollar volume to greater than 20 million, and RS rating overall to be over 80. And you can see the results over here. Some pretty good, strong names here. Futu is strong, Apps, DocuSign, a bunch of good names here. And the bottom one here is fund accumulation. So I'm looking for fund ownership increase of over 15%, number of funds in general to be over 10, and accumulation distribution rating over A and to be A and B, or sponsorship rating also A and B. So these are good kind of starter screens. Feel free to copy them down, mess around with them. You can tweak these in so many different ways. And in general advice for screening, I would suggest to not be too restrictive with the criteria, because I kind of like to see 100 or so results here. That way I can go through, and if a stock doesn't quite meet 25%, I'll still be seeing it and have it pop up on my radar.
So let me go back to that one screen. I'm going to give you something.
Sure.
So when the market's really strong, that number will be higher because of the RS rating. A lot of good stocks will start popping up. So that's a good screen, very good screen.
Yeah, and you could do 3-month RS rating. You can really dive deep and tailor this so it suits your needs. And if you don't have MarketSmith, I think the IBD stock screener is something I don't really hear much about, but it's a great feature. It's free if you have IBD Digital. I think I'm not quite sure how to get to it by the main page, but if you just Google search IBD stock screener, it should pop up. And here's another screen that I made RS rating over 85. Last quarter sales growth greater than 20%. Last quarter earnings estimate percent change over 20. Current year estimates over 20. Pre-tax margins over 10. And it comes up with some very good names here. Pinterest, RH, TTGT, UI is very strong. EMPH, some really good names here. So this is great, definitely an option if you don't have MarketSmith. All right, so now let's get into kind of the meat of my talk, which is technicals. So this is a little bit more interesting than fundamentals, which we all know. And in general, I kind of want to have a kind of common language here. So I want to kind of first start things off by explaining my chart layout. So first of all, I use TC2000. There's definitely variations here that you can set up in TradingView, stock charts. I'll have a link to the kind of trader line layouts later on in the video, but this is kind of what I use. And up here, you'll see some blue histograms pop up if it's a price new 250-day high, and you'll see a pink histogram if it's a RS line new 250-day high. Then I use for my moving averages the 10 simple, the 21 exponential, and the 50 simple as well. And down here, I've got the RS line plotted on my chart, and this basically just tracks the stock's price relative to the SPX, or the SPY in this case. And down here on my volume, portion, I've got a 20-day moving average, as well as any blue bars here are greater than, they must be up bars or bars with high daily closing ranges, and the volume must be greater than any down volume of the past 10 bars. So if you see blue, basically it means above average volume. Yeah, and here's you can go here and download very similar layouts in TradingView from TraderLion. They've got some great scripts, and yeah, definitely check that out if you want to have a chart layout similar to mine. So first things first, when I'm looking for leadership stocks, is I want to see that they're in a longer term uptrend. So here we're on a weekly chart of the Trade Desk TTD, and since its IPO, I mean, this thing has been a monster stock. It's above a rising 30-week moving average. That's this red line here. So by definition, by stage analysis from Stan Weinstein, this stock is in a longer term uptrend. And then what I look to do is buy short-term consolidations within the context of this longer term uptrend. And this long-term uptrend basically means that net funds are accumulating the stock versus selling it. So in this talk, I want to talk about relative strength a little bit, and there's a bunch of different ways to approach this. But basically what RS is how is the stock performing versus the general market or other stocks? And there's a couple different ways here that I've highlighted. You can look at the RS rating in MarketSmith, the RS line trajectory. Is it at 1 o'clock, 3 o'clock, 6 o'clock? You want to look at the volume. How is the volume on up days versus down days? You want to take a look at the daily closing range, especially on a day like today when I think the QQQ is down 2.5%. Any stock that had a pretty strong closing range is worth looking at today because it's basically outperforming the major index, the QQQ, and funds basically didn't want to sell this stock and as much as that overall index as those overall stocks. And similarly, the weekly closing range, during a correction, you want to see stocks have at least a 40% closing range. That's a sign of accumulation. You want to see it finishing off those lows of the week. And you also want to see it holding key moving averages. And ideally, the percentage from its peak compared to the market will be less. So if the overall market drops 35%, a stock that only drops peak to trough 15% is exhibiting relative strength. So first, looking at the RS rating, you can find this in MarketSmith. It's right here on the chart. And if you open up the columns, you can add the 3-month and 6-month, which is pretty useful. And it's pretty interesting to see that Zoom only has an RS rating of 89, but has a very, very poor 3-month RS and 6-month RS. And that's just because it's been building this super big base here within the context of a huge overall uptrend. So I think it was still actually like a 99 around here, even when definitely as a swing or position trader, you probably already want to be exiting. So this is the RS rating. It's definitely very useful, especially for the screens as we saw. And the next aspect is kind of the RS line, which is down here on my chart and also in MarketSmith. So this RS line at any point is the price of the stock divided by the price of the index that's being compared to. So in this case, the SPX. And basically, the value does not matter at all, but the trend and the trajectory definitely matters. And this is a chart of Zoom way back in February and March. And you can see up here, the SPX started to correct and Zoom is actually still going up. And this led to the price increasing a lot faster than the price of the SPX, which is actually decreasing. And this thing basically went parabolic, telling you that you need to be watching this stock Zoom. And obviously we know what happened with Zoom. It went on to increase about 300%, 300, 400% from this point. So this is a very, very key thing to look for during a market correction. You want to look for RS new highs, which I think is that'll come up later. But first, we've got the weekly and daily closing ranges. And as I said, during a correction, you want to see very good weekly closing ranges, meaning that institutions have noticed that the stock has dropped too much and they want to buy more. And it basically finishes well off the lows here. And any closing range greater than 40% on the week is deemed pretty good. And I think that's from Mike Webster. And if you're not familiar with what a daily closing range or weekly closing range is, basically you take the high of that week and the low, and you look at the basically percentage of the close relative to the high and the low. So if it finished right at the high, the closing range would be 100%. In the middle, it would be 50%, and at the low, it would be 0%. So 40% is about at least here. You can see we had good closing ranges on NVIDIA, basically 3 out of the 4 weeks down, and it went on to increase 100% once the overall market returned to an uptrend. And going quickly back, I also plotted down here the closing range, so you can see basically 0 to 100%, all of these weekly closing ranges up here. And next up, we've got the characteristic of holding moving averages when the market doesn't. So up here, we've got the S&P 500. I've got the 200-day moving average plotted here. You can see it slices right through it and falls another 8%. However, down here, we've got Tesla, and after its monster run, it falls right to the 200-day moving averages, 200-day moving average, and bounces and holds it, clearly showing RS. And this also lines up with the 21 EMA, the 50 SMA, and a really good way to find stocks showing RS is once an overall index, say the QQQ, slices through the 21 EMA, scan for stocks that are holding that key moving averages, and that's really a sign that they're exhibiting relative strength. So the next thing I want to talk about is accumulation, so volume signatures, and basically I want to look down here and see as many big blue spikes as you can. And this is a sign that institutions are still accumulating shares. These big spikes are signs of institutional activity, and if they're blue, that is great, especially on earnings gap ups. You want to see as many of those as you can. And this is Roku from this year. You can see that throughout this uptrend, you see so many examples of large institutional demand coming into the stock. And this is really what pushes the stock higher from all the way around 100 to now about 437. And similar to that, you want to see earnings gap ups on huge volume. And these could mark the start of a longer term uptrend because new kind of information is coming to the market through an earnings report or other kind of source of information. And that basically tells institutions that the story is changing and that they have to invest in that stock because it's got a very, very bright future based on maybe guidance, a new product coming to market, some sort of huge news that will really lead to a lot of growth in the future. And here we've got Pinterest, and we all know what happened. All the way in August, it had a huge gap up on volume, held it, frustrated a lot of people, but since then it's gone from about 35 all the way to now 80.98. So this earnings gap up can be the start of a major uptrend. And we saw that in so many different examples this year. Twilio, Pinterest, as we have here, Fastly, apps even had it. So there's so many different examples. Tesla from 2019, as we'll see in a chart later. So this is a clear thing that you need to look out for, especially if the volume is larger than any volume since the IPO. So the next thing I want to talk about is performance trends and tight action during corrections. So what I call a performance trend is really the stock price trending above the 21 EMA, which is trending above the 50 simple moving average. So here we've got NEO, and starting all the way back in May 2020, it broke out above its 50 SMA, went sideways for a little bit, but then moved up off its 21 EMA, and it never really closed below its 21 EMA for more than 2 or 3 days during this entire uptrend until it kind of started basing here. And now this day actually is the first time in quite a while that's closed, if this is where it closed, below that 50 simple. So this power trend, this performance trend here can last a lot longer than any of us think. And during this time, it increased from about $4 all the way up to 50. So if you can find a stock like this in a trend like this, look for a nice longer term base and get in when it comes off those key moving averages. And the other thing I want to highlight here is the tight action during correction. So up here, we've got the SPX line, and you can see we started correction here. A lot of growth stocks got hit very hard. NEO pretty much went sideways and tightened up on the right-hand side, held that 21 EMA, moved up. We started correcting again, went really, really tight, and just kept doing that when the market was under pressure. And this is a sign, once again, that supply and demand characteristics are in the stock's favor because institutions are accumulating shares when the stock price drops too much, especially during those corrections. So here is our first case study. And this is Tesla in 2019. And first, taking a look over here on the left-hand side, we've got our first kind of example of a huge earnings gap up. And then after this point, it goes up, trends above the 10-day moving average, falls back to the 21 EMA. And then you can see we start a very powerful trend above the 21 EMA once again, and go all the way up to a climax top potentially. And then finally here, we break the 50 SMA. So what I want to highlight here is first, that earnings gap up, new news came to the market. It broke out of a pretty long-term base here. You can see where it breaks into new all-time highs at this point. And then it starts to respect those key moving averages, the 21 EMA. You see a step up in average daily volume as institutions become more and more interested in the stock. We see it hit relative strength new all-time highs as well as price new all-time highs. And this leads to a very powerful increase from about 57 to 178 in just a few months, a very, very powerful trend. And as we know, we corrected and then started to set up once again, which is our second case study. So here we go. It bounces off that 200 SMA and then starts moving up, breaks through that 50 SMA from the bottom and moves up, tightens up along the 21 EMA once again. So once again, we've got an example of tight action above that 21 EMA. That's definitely something to look for. And we see a move up on higher volume. We've got two blue bars here, subtle pocket pivot accumulation, moves sideways, moves up, tightens up again, falls back to 21 EMA, and breaks out on above average volume. And Tesla throughout this year was really a model book stock. It kept moving up, basing on below average volume. Look at the volume dry up here, and then moving up on above average volume. It does this within this base, bases once again, and moves up on above average volume one more time. And today, again, it doesn't look too good, but maybe it forms another base, but time will tell. At this point for me, based on my style, it's no touch until it really sets up and tightens up like it did during these bases right here. So this is our third case study. We've got Shop in 2019. I didn't want to do only ones in 2020 because there were so many, but this happens every single year. The best stocks exhibit these same kind of winning characteristics. So we've got a nice longer term base here on this left-hand side. And then we break through the 50 SMA and all those key moving averages, and this starts the next uptrend. And from this point, it really has a nice respect for the 21 exponential moving average. We can see it finds support around here, this area, again, breaks through it a little bit, but shoots right back up above it, and here, here, and here. And really, you can see it bounce off the 50 SMA here. And then this finally, when it starts breaking the trend, you can see volume pick up on the downside. That is when this trend is over. And this is also a really good example of large up volume spike. You can see big blue bars coming in. So I want to see as many of these as possible within the context of an overall trend. So here's another case study from 2020. We've got Fetch, and this is during the kind of correction that we had in November. And look at how the SPX moves down and Fetch just pretty much goes sideways. It's ignoring the market action. This is telling you that institutions behind the scenes are really just accumulating shares whenever the stock drops just a little bit. And then we kind of move up, tighten up against the 21 EMA, form some pivots here, break out on huge volume through this base. So this pivot, as well as the overall cut base pivot. And then we have a kind of David Ryan MVP indicator where you've got so many up days in a row, really a sign of institutional accumulation. And it still looks to me like it's leading. It is falling apart a little bit on the right-hand side, not falling apart, but pulling back. And it does need to tighten up a little bit before I would consider an entry. But overall, it looks very, very good. And you can see at this point right here, I'll go back. It has relative strength and price and all-time highs. All the leading stocks are usually hitting new all-time highs. That is when the real money is made. When most people are scared to buy because they think it's too expensive, it's overvalued, but really instead it's just the funds and the supply and demand characteristics that are driving the stock higher and higher into new all-time highs. So the next case study I want to talk about was Twilio in 2020, and this is another example of a huge earnings gap up. And on these earnings gap up, another key thing to look out for is how does the stock close on that day? I mean, here you can see it closes right near the kind of 85% mark here. So really, this is showing one more time a sign of strength because it's got a high daily closing range with huge volume. So funds are buying the stock hand over fist, jumping over each other to buy as many shares as you can. And on the second day, look at the additional volume come in here. I mean, and once again, you've got a high daily closing range. So this is once again a sign that funds were not done buying. And this is a huge sign that this type of thing, this action could happen. And basically from this close, it went from about 185 to now 409, and it's holding up reasonably well above that 21 EMA. Let's see, is there anything else I want to talk about? Well, obviously you've got the RS line confirming this move. And once again, you've got another earnings gap up here and most recently here. And then I think they had a secondary offering very recently, but overall, an extremely strong stock acting very well after this earnings gap up. Yep, I think I had one more. Oh no, that is it. So how do you find the potential next leaders? Well, we can talk about the screens a little bit more about for those top growth fundamentals, but really you have to be looking at the charts that come up from those screens because a stock isn't going to go from 50 to 250 without presenting good buy points and good technical characteristics. So the price action has to match the fundamentals, even if the earnings growth is over 1,000%. The price action, supply and demand, has to confirm the story and the fundamentals. And on a deep red day like we had today, you want to be noting those relative strength characteristics that we saw. You want to keep a running list of stocks that are closing higher than the indexes that have good daily closing ranges. And I'll talk about that a little bit later in the presentation. And at the end of the week, you also want to be screening for strong weekly closing range because the best stocks, no matter how they look intra-week, they usually finish very strong. We've seen that with a stock that I own currently, SI, Silvergate. It's been all over the place intra-week, but overall, it still manages to close up on the week. And that's institutional accumulation. When the stock drops too much, they decide, oh, it's Friday, we got to buy more shares. And there we go. It finishes the week very strong. And something that I've definitely paid more attention to is huge earning gap ups, as we saw from the case studies. Twilio, Tesla, Pinterest, Fastly, all these huge runs started from these enormous gap ups on volume. And as a retail trader, it's very kind of scary to buy a stock that's already up 20, 30% on the day. But really, you have to look at the price action, look at the volume pouring in, and realize that it's institutions learning new information and acting upon it. So I think if you don't want to buy on that first day, you can wait for it to consolidate, tighten up on the right-hand side. But then you want to be buying these stocks that had recent huge earning gap ups. Those are the ones that are being accumulated hand over fist by the institutions. And then, as I talked about a little bit earlier, you want to look for new relative strength and price all-time highs. This is just a sign that, once again, the supply and demand characteristics are in favor of the stock going to higher prices, especially for new relative strength during bear markets and corrections. That is a sign that institutions are kind of supporting the stock even when they're selling maybe other shares. And that stock could be the first one to kind of lead the next uptrend because it's kind of a basketball, a beach ball underwater. And once the overall market pressure lifts, it will be the first one really driving higher to higher prices. So I want to talk a little bit today about my kind of red day routine, especially because today obviously was a pretty deep red day, and kind of how I look for RS and kind of keep note of stocks that are doing pretty well. So right here, I just kind of downloaded the Grow 250 list from MarketSmith, and I import it into my TC2000 watch list, and I'll kind of talk through each of these columns here before we get into it. And I'll also discuss kind of the methods that I use to scan for relative strength. So first things first, I've got the symbol, of course, the next earnings date, because that's incredibly important to keep an eye on. Then I have the weekly change, which kind of helps me keep track of how the stock is performing on that week. I've got the price, the percent change on the day, the volume buzz, which is basically TC2000's relative volume. This number right here, 602, basically means that volume is 6 times higher than the average 50-day volume. I've got the percentage from the opening price, percentage from the low. Stochastic 10-4 just kind of lets me know over the past 10 days, where's the stock within that range? And then I've got up down volume, which is basically the average up volume. Oh, excuse me. It's basically over the past 50 days, the up volume divided by the down volume. So here we've got 2.97, which is very significant, over 1, which basically just shows very strong accumulation. Excuse me. And then, yeah, go ahead.
Oh, hey, Richard, for when you import your growth to 50 list to TC2000, do you create the up-down volume? Is that from this Excel spreadsheet, or TC2000 has up-down volume? I thought.
So I had to make this PCF, and I can get it and share it in the chat. Although I think I'll tweet it out later because I think the chat feature cuts it off or something.
Yeah.
Yeah, but this is it's a pretty long PCF because TC2000 coding language is a little bit limited. But yeah, this is a super helpful statistic, and anything over 1 for me is showing accumulation. What do you think, Anish? Do you use this metric?
I use it on MarketSmith all the time.
Yeah.
Anything over 1, I mean, I like over 1.1.
Yeah.
I'm going at it. 2,
right.
Anything 2, all in. Because I pay attention to this all the time.
Right. Yeah, you can find it. You can go to a weekly chart on MarketSmith, and it should just be on the left-hand side there, I think. All right, so yeah, this column just shows me it's a check mark if it's a price new all-time high that day. Then we've got relative strength new all-time high. It gives a check mark as well. Green dot and teal dot are just basically stochastic crosses. 3-bar break to the upside is when a stock consolidates for a bit and then breaks through 3 highs at the same time. Upside reversal is when it undertakes the previous bar's low and then increases above it. Oops reversal is when it gaps down and then moves up through that low. Downside reversal is when it breaks out above the previous day's high and moves down. 3-bar breakdown is consolidation, break downward. And these two basically tell me if a stock is below the 21 EMA or below the 50 SMA. And finally, we've got the weekly closing range over here. So this stock basically finished within 18% of its high to low range, so pretty low. And the daily average range was also about 18%. So how do I scan for RS? So this one here is basically, is the stock down less than the indexes, or is it green on the day? So the QQQ was down today about 2.5%, I believe. The SPY less than that. So any stock that was green or really just down less than the indexes was showing a form of relative strength. And VUSI was showing extreme power here, up 15.5%, so clearly showing RS. And you've got some others down here that are also green, very strong, Sono, SF. But all of this isn't created equal because you want to also keep in mind the closing range, and 18% is pretty poor. That means it moved all the way up much higher than 20.48 and finished, even though it was up 15%, pretty low within its range. So I also like to look for and sort by the daily closing range within my overall watch list. And I think the great part about TC2000 is you can sort by any of these column headers. So if I only wanted to see price new all-time highs, I would click that here, and it would basically sort by that and get all the green check marks here within this column. And here I've done this with the daily closing range, and you can see that QFIN was at a 97% daily closing range when I took this screenshot. Very, very strong action, even though it was down 5%. So you have to think about it relatively. It was down a lot, but it finished pretty well off its lows and had a good end to the week at 97.87. And you've got some other decent names here, FTNT. So I kind of look at both those lists, and if a stock appears near the high of both of those, that's a pretty good thing. And I make sure to note that and keep track of stocks that are appearing in a bunch of these different scans. So another thing I like to do on deep red days is sort by the percentage from the low, because if you think about it, if a stock moves pretty far off its lows, that's once again a sign that institutions are kind of supporting it at that price. And here I've got the Growth 250 once again sorted by this column, the percentage from the low. And you can see TIRX was actually almost 40% off its low, which is pretty insane. MWK was up 12.15%. So you've got a lot of them that were well off their lows. So even if they weren't up on the day, you want to look at those charts that were supported and probably have upside reversals, oops reversals, and pay special attention to these that were supported and finished pretty strong well off the lows. And let's see, you've got some other stocks here. VUSI is down here. So once again, I would definitely keep note of VUSI, even though it did finish with a pretty poor daily closing range. SIs here, RCII, Baidu. Nothing else really stands out. Riot is another kind of Bitcoin related stock, crypto, and QFIN is there as well. So I think that's actually it for what I had planned, but I'm happy to take any questions and go more in depth in terms of the screening, the technical characteristics that I look for. Really any questions that you guys have for me, I'm happy to answer them.
Hey, Richard, you got some few questions on the chat.
Okay.
It's, I believe, start from 6:18 p.m.
6:18 p.m. Okay, so I see something from Victor. Hey, Victor, how's it going? Yeah, I agree. So it's still holding the gap. He's talking about apps. I don't know if I can go back to. Might take a while to go back to the chart, but I think it's still holding that gap pretty well and is very strong relative to the overall market. I think I was talking about in the fundamentals section. So here we go. So it had this earnings gap up on huge volume, and yeah, it's pulled back. It's holding the 21 EMA, so it's acting very, very well and not really giving up this low at all, which is a good sign and looks pretty strong. So apps is definitely on my radar, especially when the overall market pressure lifts. So Gregory asks, how do I find the stocks with strong weekly closing range? Well, I kind of import a stock list into GC2000 and I'll basically sort by that column. I have that watch list as set as the default on any of lists that I look at. And I can basically click that and all the top ones appear on there. And you could also kind of scan for it in TC2000 using an easy scan and set a criteria. I only want to see daily closing ranges greater than 70, 85, 90%, and really narrow it down that way. And the formula for closing ranges is just STOC 1.1, basically a one bar stochastic, the high, the low, and that closing range. Are all these screens predefined in MarketSmith? If not, is there a way to customize it? You can customize any of the screens I used in this presentation. I haven't shared those screens, but I'll probably publish them so you guys can find that under my name. Let's see. How do you set the stop loss for your stocks? That's a great question. It's not really the main topic of this presentation, but in general, if I bought the reversal on apps here, I'll probably set it just below this low or below the 21 EMA, basically just below a kind of obvious support level. So I know quickly if the setup has failed or if it could continue, I'll move my stop to the next kind of obvious low. So we've got a question here. Is there any other charting software that you recommend other than MarketSmith, which is more affordable? For charting softwares, TradingView is a great option. And earlier on in the presentation, I shared there's a bunch of scripts from TraderLion showing you how to set up a lot of the enhanced volume, relative strength. So you can really customize TradingView a lot. So Bob says, had some questions on the trading algorithm that Richard uses and posts lists on Twitter each week. Bob, what's your question about that? I think you're muted. Oh, he's putting it in the chat.
I already told him to unmute.
Okay.
Okay, so you did allow me to unmute. So, hey, Richard,
Yeah.
I just started catching up on your videos, and I saw your video on, we had that big trading algorithm on the Excel worksheet.
Mhm.
And I was going through it this week and I kind of run my list and then, kind of score it. Did you change the scoring on your RM score?
So that's a good question. So the score in that video is just an example. The actual one is a lot more complicated and kind of a black box even to me. I've tweaked it so many different ways. So I haven't shared the actual one that I use, but the scoring algorithm that I published for that video should be the overall end result should be very, very close to the one that I use.
Well, I was going to say, because I did get a lot of the same stocks, that you had.
Yeah.
But the scores were just a lot higher.
Yeah. Yeah.
And then is that kind of like how you determine, like, because those seem like the true market leaders, because they have all of the high scores associated with that. So, I mean, I guess in your case, is there some sort of score cutoff that that would say, okay, this isn't a true market leader because it just doesn't score high enough?
Right. That's a good question. So for people who don't know, I basically download all the stocks from MarketSmith, put them in an Excel sheet, and basically assign scores for a lot of the stuff on this page. So earnings last quarter, if it's over 100%, I'll give it 5 points. Estimates greater than 25%, I'll give it another 5 points. Increasing fund ownership, give it 5 points. And basically, I've noticed from my sheet, anything over 100 for the RM score, I need to really try to get into that stock. Because once they do that, I mean, it's a really, it's one to watch. So Zoom did that way earlier in the year. Apps is consistently over 100. Futu is over 100. But in terms of a cutoff on the low end, sometimes the scoring algorithm doesn't quite take into account price action enough. So I think, for instance, Upwork is only like a 20 right now, while it's still a very strong stock. So how I use that sheet is I copy the top 500 from that list, and then I put into TC2000, and then I go through all those different charts.
Okay, yeah. And because I was wondering, since you seem to change the scoring, like I'll have a lot of the stocks will show like over 200, over 250.
Right.
That's just because you've added more criteria to lower the score. So
yeah.
Okay. All right. Thanks. I appreciate it. Yeah.
Yeah, no problem. And I think I've almost overcomplicated the screening process. Like you do not have to make your own Excel algorithm. You can make a few screens on FinViz or MarketSmith and get something very, very close to what I've done in Excel.
Because I Anish knows I pretty much trade predominantly options. Actually, that's all I'm trading now is options. So I basically, have kind of gone in out of the 7,000 stocks there are, is narrowed it down to about 400, and then, scoring from there, because I have to have a lot, I can't trade something that's 500,000 shares. I have to have at least 3 to 4 million shares.
Right.
Again, like you said, but I know this, I just need to look for higher scores, so I don't have to really change your method. I just, I'm only trying to keep a look at 40 or 50 stocks a week to place option trades on.
Right. Yeah. However, you can narrow it down to just a few hundred to go through is fine. Yeah. Cool. Let's see. Got a question here. I have access to IBD and user stock screener, but not MarketSmith. Can you recommend other sites that you can get the quarterly earnings and sales percentages like you see in MarketSmith? I think FinViz is pretty good free resource. I'm not super familiar with it. I haven't used it extensively, but I think it's a very good substitute for those screeners. From Melissa, how will you gauge when the current market pressure lifts? That's a great question. So how I look at the market is basically 3 different things. I look at how are my holdings doing? I look at the leadership stocks. I keep a running list of leaders. And then I also look at the indexes. And right now, the indexes are pulling back. My holdings have been getting hit. I've had to sell a bit and reduce to my cores. And also the leaders got hit today. So right now, I'm pretty much on high alert, but once new trades that I put out get some traction, I'll gradually increase my exposure. If 2 trades in a row work, I'll either take another trade or add to my existing holdings. So I kind of practice progressive exposure. And obviously, I want to see the indexes recover, retake the 21 EMA, trend above that, and also want to see the overall market leaders do well. I think if you look at those 3 things, how is your trading doing? Are you trading well? Is stuff breaking expectations, the leaders, and then the overall indexes? All right, we've got a question from Wen. How about stocks without earnings in 2020? Many without earnings ran up a lot. That's a good question. In general, over the long term, as William O'Neill did the research, earnings matter. You want to see a stock have earnings. However, we did see a lot of recent IPOs, especially do really well when they had strong sales growth. We had NEO, which is a stock I traded a lot that has no earnings, not supposed to be profitable within the next 2 years, but it still ran several thousand%. So it's all about what is working at the point, what is working at that time in context of the market, what is working. Are institutions caring about earnings? If they're not, then you kind of have to adapt and lower that restriction. But in general, really high sales growth is by itself is something that will pique my interest. And I'll see that I'll kind of check, does it have a path to profitability? And is it still a strong stock in terms of price action? So Monil asks, do you look to buy potential market leaders based on fundamentals, or do you ever trade on technicals alone? Well, I think the closest I get is something like NEO here, where it still had triple-digit sales growth. I'll still trade that. But in terms of position trades, where I'm trying to hold a more concentrated position, I want to see good earnings, good sales growth. I will trade a kind of very strong setup, like a Blink or a Plug, which doesn't really have strong fundamentals. I'll kind of swing trade that, but I'm quicker to take profits if it doesn't have the good sales growth, earnings growth, or really fund ownership. Those matter to me. Okay, Casey asks, is your stop active intraday, or do you wait until the end of the day? I try to wait as much as I can until the end of the day. I do have stop losses set in with my broker intraday, and those do get hit, and then I'll look to either re-enter if it does kind of a U-turn, or wait until the end of the day and see how the daily closing range is and how it's acting versus the market. Joe asks, are you happy with your return since you started trading? I mean, we've had two strong years since I've started trading, so it's going well so far. Let's see. Somebody asks, if we get market leaders from the screeners, but the price is either too high or not at a good setup point, how do we handle those situations? Well, first of all, I think the price being too high is not quite the right way to look at it. You want to see certainly a good setup, but just the price being over $100 doesn't mean it can't go to $200, $300, $500. It's in context with the run that's already had and also the fundamentals. So if those are continuing to improve, the stock is going to continue to appreciate in price. However, you definitely do want to wait for a good low risk entry point where you can manage your risk. You don't want to chase a stock just because it's a high flying name and it's up a lot on the week, on the year. You have to wait until you can define your risk and manage your entry point. Pritesh asks, can you share your scoring algo for those who missed it before? Go ahead and check out the video that Bob was talking about. I don't know if somebody can link it below, but that kind of shows you how to set up and make something similar for yourself.
Oh, can you say that again? What do you want us to post for you, Richard?
I have got a video titled on YouTube, CANSLIM algorithms or something like that.
Let me find it. I'll post it. Give me a second.
Yeah, awesome. Thanks. Hey, Sid. I've created JavaScript, which will give you the symbols of all your market screens and favorite screens. Oh, really cool. Definitely tweet that at me on Twitter. I'd love to check that out. Somebody suggests Koifin is good to get fundamental data. I haven't used it personally, but I've heard good things about it. What new trades do you have put on? Melissa asks. Well, recently I've been selling stuff. I've been trying different things, but I haven't gotten traction. So right now I actually only have a core in SI. Chet asks, what is your near to medium term outlook on the market? Is today the beginning of a substantial sell-off? Well, the honest answer is I have no idea. But the good thing is we don't need to know and anticipate. We just have to react to what's actually going on in terms of price and volume. Personally, I'm pretty, I view this as an uptrend under pressure at this point, and I'm waiting for things to improve in terms of the market, the leaders, and stocks I'm interested in before I really dive back in with a lot of that. Andy asks, could you please go over your 3-bar break up and 3-bar break down criteria, and is that computed automatically through some coding? Let me see if I can share my screen. If that's okay with you, Anish.
Yeah, you should be able to.
Yeah. Well, I want to see. I'm going to stop sharing my presentation and let me go ahead and do that.
Hey, Richard, when you get a chance, look at Bill Scott's video screen.
Yeah, I've seen it. That's awesome, Bill. Thanks. Okay, let me reshare. Oh, I've lost the. Oh, there we go.
You should have the controls. There
okay, can you guys see that?
Yeah.
Okay, let's go to Peloton because this has been a frustrating one. But anyway. So down here on my TC2000, and I've shared this template on Twitter. So if you want something similar to that, feel free to download it. But this histogram down here, compared to these two up here, which are relative strength to all-time high and price new high, this one denotes a 3-bar break to the upside, which is a concept that I learned in the Ticker Monkey group, which I know Victor's from over here. But anyway, looking at Peloton. We had a nice consolidation, pretty tight action against the 50 SMA. And then this bar right here breaks this high, and this high all in one move. So this is a very powerful move in addition to the volume, which there we go. So actually wasn't that high volume. So let's go to this one because this is actually one that I bought right here. So once again, a consolidation, and this bar it breaks above this high, and this high all in one bar on above average volume. So this is a 3-bar break to the upside, and it's usually the sign of a short-term increase in price. And I like to use it within the context of a nice base. It's kind of also a kind of Mark Minervini low cheat entry. Yep. So people call it different names, but in Ticker Monkey, this is a 3-bar break to the upside, and it's a good sign. You want to see this, and it's a good way of getting into a stock before the actual breakout, where you might have to deal with a bunch of pressure up here. So that's a 3-bar break to the upside. And then to the downside, you've got one right here. It's a very similar concept, just obviously decreasing in price. We've got a little bit of a consolidation. And then in one bar, we break this low, and this low to the downside. And this one wasn't on a higher volume, but definitely it's something to look out for if it is on a high volume. That can mark definitely some selling in the near future. And I think if we go to XP, yeah, here we go. So I had a position in this starting from this base. It was going well. And then in just one bar, I mean, this was down 13% on the day. I got out on my stop loss. I think I had a staggered stop, one at this low and one at this low. And it just had no support on the day. So this is the sign of potential like selling in the next few days, few weeks. And usually for a swing trader, a good time to basically call it a trade and take your profits. So that is the 3-bar break to the upside and the downside. Let me know if you want me to explain that a little bit more in depth. I'm happy to do so. And let's see what the next question is. And Anish, if you have any good questions in mind, feel free to jump in as well.
No, you're doing great.
Okay. When you find a stock you want to get into, you have what you feel is a good buy point. Do you take a full position right away? Is it market dependent? How is the overall market doing? Yeah, great question. So let's see, what did I buy recently? So yeah, it's very market dependent. It's also dependent on how I've been trading recently. I want to be trading the best. This is a Mark Minervini thing. I want to be trading the largest when I'm trading at my best, and the smallest when I'm trading at my worst. So If the last 3 trades have been profitable, they've gone into profit right away, that's a sign that kind of my system is working. And then at that point, I'm fully happy to take a full position, which for me is about 10% position on my portfolio on that first buy, scaling a little bit more if it continues to work. But in a market like today, I'm starting with a half position and taking off very quickly if it turns against me. So my trading is very much based on how my recent trades have been doing, and what the current market conditions are doing.
Okay, let me answer one question now. There's a question here about wash sale rules. So that's a question for your attorney. Yeah, for me, I used to worry about that. I don't because I end up getting profit at the end of the year. So it just, takes care of itself. But that's a question for your attorney. I won't discuss that. I mean, that's a tax attorney question. So I'm just going to leave it at that.
Sid has a raised hand.
No, I think you answered his question about
cool.
He'll tweet you on Twitter about this, what you call it?
The JavaScript, right.
Yeah, it's JavaScript.
Very cool. Let's see. Do you put hedges on with your portfolio? If yes, can you provide an example or two? I still have to define my system with that when it comes to hedging, so I don't have something to share with that. Just go ahead.
I can. There's a lot of ways on hedging. Mark Miravini just sells 99%, 90% of the time I would sell just because you would see the stock not acting upright. Or if I do keep a hedge, I would have a short position on either a weakest sector or on the same position itself. If I'm long, if I feel something's wrong, I'll just flatten the trade with a competitor to that stock, or sometimes it would be the same stock. If it's not working, I would sell the long and ride the short. But I rarely do that. I've tried multiple strategies. Sometimes they work with options. You can get some puts in. I just sell now. I keep my trading as simple as it gets, and that gives you much better performance. So if that helps.
Yep, definitely. And I think somebody said if you feel like you need to hedge, it's time to sell something or something like that. So Joseph asks, if the market goes into a deep correction greater than 10%, will you hold your core holdings as long as they stay above key moving averages? Will you just go 100% cash? Well, right now the only position I have is SI, and I have a good profit. I entered on this 3-bar break to the upside on huge volume down here. So I have a really good profit cushion on this. So I'm willing to sit through a 20-30% pullback, as it's actually done a few times here, while it builds out some type of consolidation. But if I had less profit on the position, 20%, 15% even, I'd probably at this point have taken my profits, just because I don't want to sit through a base with that little profit cushion. I think there's graphics out there where you can see what profit cushion you have, what type of correction are you able to sit through. And in general, you have to kind of put that in context. Are you a swing trader, a longer term investor, or a position trader? And your actions are going to be very different based on your different style. So Neil asks, how many trades go bad in a row before you reduce position size? Generally, by how much? I don't have a set rule for it. I definitely should, but usually if there's about 3 bad trades in a row where I take full stops, that would send me a message that hey, things aren't working very well. Slow it down a bit. And usually at that point, the market is a little bit choppy. All right, so we got a question here. If a stock is a low volume correction but is breaking key support levels, do you still hold some or do you trim some? I'll most likely, depending on my profit cushion, trim half or a third. Price ultimately is what matters, but definitely a low volume pullback is a sign that institutions are not behind the selling. So I'll probably sell a little bit if it breaks key levels, and then add that back when it moves back through my cost, or it sets up another good entry point.
So I got a question it's pointed towards me on tips minimizing from Monil Patel on tips minimizing screen time during the day due to busy career outside the markets. So I'm technically in that situation right now. I guess a lot of people know I do have a practice that I'm running since for the last 2 years, even though prior to that I was a full-time stock trader. I am technically full-time also because I do have my own trading office at the same time. So the best way to minimize screen time is you do have to plan your trades on the weekend. Have to screen the charts. You have to know what you're going to buy if you haven't bought anything. You have to know where all the points are going to be. And you do have to plan for black swan events, areas where if you buy something, the stock can turn. You do have to anticipate strategic points prior to buying and have a game plan. So good analogy is how pilots, when they start their airplane, is they do a checklist, and they do have everything. Even for emergency, they have a checklist. Like for example, with the United flight, with had an engine cover blown off this weekend. Those pilots had a checklist for that. It's called. It's in actually in their manual in the airplane. They exactly says it. Engine cover's gone. Engine blowout happens. What do you do? Step by one. There's a game plan to approach. So same thing in stock. So what I would do is I would set up a game plan. Mark does it too. He does it on the weekends. I do it on the weekends. And I have a game plan on Monday. There was a trade today. I just happened to be stuck in traffic, could not get to the office at 9:20, and I was stuck at a red light for a longer time, and there was some traffic jam. So I got to the office at 9:40. I had to sell a stock, but I missed by 10 minutes. I was like, all right. As soon as I parked the car, opened up my phone, hit sold. It didn't really matter because I had a other trade which was hedging it. But you have to have a game plan. Things can go wrong. You have to be unemotional about it and just follow the plan. That's the best way. I do see the market. I do recommend that you do see the first, at least the last hour of the market. I do make time to see that on my schedule. And then in the middle of the day, there are days I just cannot see the market. I have alerts. One of the alerts, I know TC2000 does an amazing alerts. I get text messages on my phone, email alerts. I don't know about TradingView. Does TradingView do alerts, Richard?
I think it does. I'm not super familiar with it. Maybe Ray can chime in the chat. But yeah, I love TC2000. You can just click on any line and set alert. You can do it for conditions, all of that.
Yep, that's all I do. And half the time my phone is just like buzzing all the time. I have so many alerts happening. I rely on TC2000 for my alerts at this point. I don't rely on Marcus Smith for alerts because half the time they work or they don't work. I don't know. So planning is critical. I do carry a laptop with me, backup laptop. I have backup internet all the time with me. Mark does that too. He even knows where the nearest Starbucks is if he has to go and trade. So, but I do have 2 internets with me all the time. My phone in my office being 2. Yeah, so certain things have to be planned. I hope that helps your answer, Monil. And don't, if you're starting off, don't trade so aggressively. That will help you minimize screen time. Okay. TradingView has alerts, both texting. Oh, that's awesome, Ray. Thanks, Ray. Of the last hour, what I'm looking for. Last hour, I'm looking for reversals on stocks. Richard's scan on TC2000 is really good on that one. I believe, Richard, can you point to that portion of your TC2000? The scan which shows the reversals.
The upside reversals?
Yeah, like end of the day when the price reversals are happening, you have that.
Well, this right here basically identifies an upside reversal. But this actually usually happens at the beginning of the day, especially on a day like today. So
okay,
yeah.
So yeah, I just look at price action near the end of the day.
Yeah.
Okay, so how many positions I hold at a time? Okay, so I am an extremely aggressive trader based on my performance last year and generally. I do the best with from 4, 3, 2, and 1. My performance degrades once I go past 4, but I do not recommend other people try that approach because I've worked over years, almost like 7, 8 years on that style. So I am aggressive trader. So yeah.
Sounds good. And we've got a question here. Richard, you said you like to see more than one stock in a group doing well. Would you buy more than one stock in the same group at the same time? I would. I recently owned CrowdStrike and Zscaler at the same time. But yeah, you don't want to be too concentrated in one leadership group, because often when they sell off together.
Yep.
But yeah, what are your thoughts on that?
Absolutely true. If you have the same stocks and same sector, when they turn every,
Yeah.
it's let's say if you have Tesla, if Tesla is going down, NEO will come down. Same thing with what's the competitor to apps? No, crowdsource. And there's what were those tech stocks, security stocks? They all move together.
Yes.
As sector moves happen, and when they do ride together, you have to ride them. It's a very classic, sector plays.
Right. Let's see. Eric asked, could you please elaborate on how you determined that selling was not institutional? I'm not quite sure what stock you're talking about, but obviously you're never sure. Volume is volume. But if it's a huge spike like this, especially after earnings, that's a sign of institutional activity, especially increased volume for an extended period of time. But you're never sure. But yeah, just high volume for me is a sign of institutional activity, whether it's high or low.
The most important time of the week, actually, I would say is Friday, end of the hour, because it changes the weekly charts. So paying attention to Friday, 2:30 to 4, 3 to 4, absolutely critical, because the weekly charts will change as you get close to the market end, and that can give you an amazing wealth of information. So how the following week can go.
Right. And Ray asked, you watch the futures market? I look to see if we're gapping up or gapping down in the morning. That's kind of the only time I'm looking at, otherwise just stocks. And Donnie asked, any idea when the chair line script for RS line will be working again in TradingView? Ray, go ahead and work that out. Yeah, I think we're trying to do that. I think we're in contact with TradingView, and hopefully we get that up relatively soon.
So yeah, it stopped working. It stopped working. I thought it was working.
It was working. I think I have it on my screen. I think people aren't able to add it now if they haven't got it working, or
gotcha.
I'm not quite sure. But yeah, and recently we just released the TC2000 version. That's this one right here.
Yeah.
So if you use that, go ahead and try that out. You can customize it any way you want. I actually almost like only doing one color, but yeah, it's fully customizable. And I love, this is actually a new option they added to TC2000. You can color bars based on different conditions. And yeah, so go ahead and try all that out. I think it's definitely very handy to have that on all your platforms, MarketSmith, TradingView, TC2000, whatever you can.
Oh, there's a great question for you, Richard. It's coming up.
Oh, okay. Andy asks, what contributed the most to your aha moments in trading? Great question. So I think it was in 2019, my biggest problem was buying extended, and I figured that out because I did a final report for that class that I talked about, where you basically analyze all your buys and sells, whether you're stopped out or not. And I was stopped over and over again because I was buying way too far from the better lowest entry near the key moving averages. So that's one aha moment in 2019. Don't buy extended, buy as close as you can to support and those key moving averages. That's kind of how I fixed that. Yeah, I think it's looking back on your trades and doing post analysis on your biggest winners and losers. Are there any commonalities between the losing trades, the winning trades, and try to improve based on your past performance, because the same situations are going to come up again and again. And the next time you want to be better than the first time. Do you use margin? I do not. I mostly trade my Roth IRA. I trade with Vanguard and also TD Ameritrade. I do have a brokerage account at TD Ameritrade, but my primary account is a Roth IRA at Vanguard. Let's see, any other questions, guys? I'm happy to answer anything, or we can go through kind of the leaders list, how I put that together. And this is also a really great gauge for me about how the market is doing. Look at all this red over here. that's really a sign that the market isn't too great at this point. Paul asked, do you use weekly charts? I do, especially when searching up a stock, I want to go to a weekly chart and see what the stock has done in the past. A lot of these potential true market leaders have had a really strong run in the past that kind of signals that they could potentially do something like this. Obviously, you don't know, but I always look backwards, go to a weekly chart, go to a monthly chart, look for the long-term support and resistance. And I think that's a great thing to do before you look at it daily. Which traders have inspired you the most besides Ray? I don't know if Ray's inspired me, but who knows? Definitely Dr. Wish at UMD. I mean, he was the guy who got me interested in this. Jim Ropel, definitely Matt Caruso, Oliver, all the people who I've interviewed have inspired and influenced my trading. I learned something new from every single interview. God, Ray, you love emojis, man. Yeah. So yeah, there's a ton of people. All the people who I've interviewed have inspired me. Mark Minervini, of course. Yeah, there's so many great traders out there, great books. William O'Neill, Darvas, especially. Yeah, I think those are the main people. We've got a question here. By any chance, you use market breadth indicators to gauge markets? Well, I do look at the T2 108 occasionally. But this is best used really when we're down here during a market sell-off. I look for a below 10 level, and that's usually a sign that we'll get some sort of bounce. Who knows how strong or whether that bounce will hold, but at this point, a lot of stocks are pretty not, I don't want to say extended to the downside because I don't like extended to the upside or downside, but kind of a lot of them are below their 40-day moving averages. That's what the T2 108 is, the percentage of stocks below their 40-day moving averages. So at this point, all the way down in March, you only had 1% of stocks below their 40 days. That's really, really poor action. So at this point, you might expect some sort of bounce. And obviously we got that huge V-shaped recovery. Let's see. We've got a question from Augusto for both of us. How can one get better at holding and not selling too soon? Maybe you can take this one first.
Yeah. So this takes practice, and the key is not to, if you have a stock which is making you profit, you want to hold on to that. Like, let's say you have 4 stocks and 2 are doing really well. You want to hold on to those 2 as much as you can and sell the ones which are not making you money, because it's just dead weight at that point. The other key is to raise your stops up. So while the stock is making you profit, you raise your initial stop. So let's say the stock is up 15%, you raise your stop up to 5%, for example. So if it does turn, you still make 5%. Now you want to hold the longest stock, which is moving the most, and the ones in your portfolio which are not moving, you just unload. Now the key comes down to is where you're buying it, because you could buy a leading stock at a wrong spot on a chart and it goes down on you and you've mismanaged your trade. So that would be the one way. I know it says, everybody says hold on to your leaders, but that is hold on to your winners. That is actually the key. And if you are, let's say a stock goes up, like Mark, for example, he would sell stock at 20, 30% if it's up, and he would care less if the stock goes to 100%. He would move to the next trade. He would do small trades of high performance gains back to back, and that would compound him the result. So there's so many ways of approaching it. William O'Neill would ride the best leader as much as he can based on his books, the rules in his books. That's one approach. There's a few different ways of approaching it, but the key is once you have a leading stock, I would recommend you keep raising your stops up so you always have a profit, and then you just or sell half and ride as much as you can on that profitable stock.
I think you could use a kind of a moving average as a trailing stop, and do it that way. And just like if you got into Tesla back in here, and the 50-day goes above your cost, especially given the recent correction. I think Mark Minervini in a video with David Ryan, he called this the 50-day rule. After a huge correction, if a stock moves up quickly and gets you at a profit and the 50-day moves through your cost, try to hold that stock until it really breaks this key moving average. That will get you in Tesla for pretty big move right here. Let's see. Oh, thanks, Gregory. Thanks for tuning in. Paul asks, how do you use any of the IBD lists, IBD 50, sector leaders, etc.? I look at them. I don't use them as the main kind of idea generation, but I do look at them. And I also use the FFTY, which is the Innovator IBD 50 ETF, as a kind of gauge for growth stocks. And you can see today we had a big sell-off, but actually a decent rally to end the day. So this kind of gives you a sense of how growth stocks did over the past few days. Let's see. And the IBD rankings, EPS composite. I do use that. I look at MarketSmith. Obviously, I want to see 99s all across the board, but if something isn't perfect, but the price action is really strong, I'll definitely take a trade. Jason asks, what techniques do you use, if any, to de-risk a trade early on? For example, selling 25% of your position at up 3 risks. That's definitely a way to do it. I like to move my stop up to break even as soon as I can without choking off the trade. So usually when something is up 7, 8%, I'll move my stop up to break even and or kind of stagger my stops. So I'm not taking a full stop if it reverses like Peloton or TTD did pretty recently. So yesterday I was actually up a good amount. I got in right at this high here, but today it completely reversed and took out my stop. And I was basically stopped out for a small gain here instead of a loss because I did move up my stop. Let's see, anyone shorting stocks in downtrend, even the leaders? Shorting is not really my game. Yeah, it's just not something I focus on. Potentially in a longer term bear market, I might do a little bit, but not too much.
I can answer that one. I do short actually, but shorting is absolutely 100% technical, and most of my short trades are very as the word short, they're for a few days only. I have traded some really good declines on shorting, but that's just, you can do you can hedge, you can do the ETFs and the sector, the ETFs on those, short ETFs or short the sector. The big money is made on the long side.
Right.
It's just the way of the game. It's just big money is always made on the long side.
Right. And I mean, everybody's been trying to short Tesla this entire run, but
and that's why
it didn't work. It didn't work.
And when everyone's given up, that's when it's going to work. But that's,
Right. Right.
So, what's the other question? There's a question about my interview, Richard, but we'll do that later on a later time.
I've been trying to convince him.
I know. Maybe end of the year.
He's a busy guy.
I have some surprises. I want to make sure you get some good quality content. Okay, let's see what else we got. Industrials, commodities. Okay, so this is a very good question. Industrial and commodity-oriented stocks usually don't fulfill the end of CANSLIM. Do you still trade them if they're good technical setups? I would, yes. Mark does, I do. But now these are the trades I won't hold them for a long time because they're not CANSLIM stocks. I'm trading them on technical setups. So on these trades, I just book my profit and move on to the next trade. Because I really want to hold on to stocks, as Richard earlier said, and his words were really good. Stocks which are like verbs, like Google, Zoom, like the status symbol stocks. So those are the stocks I really want to ride and concentrate my portfolio in. So these commodity trades are cyclical. There's it's like a sector rotation happening. If a setup's there, yeah, I'm going to trade it. But yeah. Well, what about you, Richard? Are you going to trade those?
I maybe a little bit, but yeah, my focus really is on trying to get a big position in the CANSLIM.
Yeah, that's where the real big, great money is on those stocks. Mark said the same thing. He's not even. I mean, I forgot how he did today.
He took SLV today, right?
Yeah, at the very end. Yeah, that was a great trade. That was great. That was great. Yeah, how you see about lodging and bank industries in short terms? I have no idea. And can you, Bill, can you give me an example of a chart? Are we talking about like Goldman Sachs or Bank of America? What are we talking about? CRSR. Let's type CRSR. What do we got?
Yeah, so I tried this today. Basically took it flat. It just didn't. It tried to make progress and just got knocked down. So
That's because of the market.
yeah, exactly. So I'm the market pressure still hasn't lifted, so I took this off.
But that should be on the radar.
Yeah, absolutely. It's showing RS today. It's up today.
Yeah,
that's huge.
That's a radar stock. That's a good close. But
Yeah.
it's not the pressure. Market pressure is holding it down.
Yeah. I traded this in here. Got stopped out for a gain. I've been trying this a couple times, but yeah, this is 100% on my radar, along with CELH today as well. But this faded too.
Corsair's making a VCP pattern technically.
Yeah.
It's a VCP pattern.
Yep.
You just gotta wait for it. You just have to wait for it.
Yeah.
What else? And you know, when Richard showed the IBD screener on the website, I think that's a new thing they've added. I haven't ever played with it. People who don't have Market Smith, but that looked very good screener. It looked we'll get some good stocks in that.
Yeah, I can do a quick demo if
that'd be great.
If people want to see that.
Yeah.
All right, let me stop sharing and I gotta bring that up. Yeah, it's super powerful and I don't see many people talking about it.
Okay, so when are you working on getting a large position in it? Can you talk about how you go about building that position and how you manage the increased risk position sizes? Okay. Hey, Jason, is that for me or Richard?
I can answer that one.
Okay, go ahead.
So let's see. When you're working on getting, so I established my initial position, which probably is going to be 10-15%. And I haven't built up too many huge positions. I had a large position in Tesla last year and Livongo too. But I treat kind of add-on buys as kind of separate trades, but I want to enter at those same low risk entry points where I know quickly if I'm wrong or I'm right, and then I'll kind of manage that ad kind of independently. So I think you can do it many ways, but that's kind of how I personally do it.
Sometimes for me on a true market leader, if I know the story, the numbers are there and I see a chart pattern and I do see a low risk entry point, I could go in heavy. I can go maximum throttle, but everything has to line up. Now while the stock is moving up, I would start taking some profit off and then see how the stock does. And if it consolidates after a move, goes a little bit sideways or gives me another pivot, I would add up a smaller position on those entry points. I would trade around my position at times, but my stops are being raised. So I'm doing a combination of things if I'm a true market leader. So, but finding a low risk entry on you would know the story. You will actually know the story on the newspaper, the numbers, you'll know the story. The story will come, the numbers will be there. Zoom had it last year. And stocks which are fighting, like a day today, stocks which are fighting the market trend are absolutely going to they have a high potential to be the next market leaders. So I'm already eyeing stocks which are really fighting the market, and when the market turns, these are probably going to be the first stocks which are going to run out of the on the race. And the first one which moves, I'm parking. I start allocating a big chunk of the portfolio in those trades. So like down days are great days because you do get to research the next leaders.
Mm-hmm.
I mean, it's a great. I mean, look, we just saw Corsair Gaming. I mean, it's absolutely fighting the market 100%. It did honestly. It closed at 50% in its range. That's a great close. 57. That's a great for anything above 40%, and on heavy volume, that's showing a lot of power.
Mm-hmm.
There was one. I think Mark tweeted Gamble GMBL. Yeah, it was wild moves, but it tried to close up today at 41%.
Yep.
There was quite a bit of stocks. He was buying quite a bit, actually. I was just busy at the practice. I couldn't see anything. Now, like, let's say with silver, you see, then all of a sudden you see silver. Silver is not a stock or an ETF. I'm going to park huge amounts of money in. That will never happen. I will park like maybe 20% or 10%, but I would not be going aggressive on silver. But I'll be saving up my cash for the true market leaders, which are fighting the trend right now, and then basing on their numbers, going with it. Anyway, back to you, Richard, on your screener. It looks very cool. First time seeing it.
Yeah, so you can find it on the website, but I just kind of Google IBD stock screener, and you can select a list that you've created yourself. You can select an IBD stock list. I usually just do the IBD data tables, which is all the stocks in a database. But yeah, some people mentioned earlier sector leaders. You can screen only based on that, the IBD 50. But I usually just do the general 8,000 stocks, and I just clicked it, so it's got to load again. But you've got a nice William O'Neill quote here to occupy your time. Yeah. So
show me that list again. Okay, the sector leaders. Oh wow, they got. Okay, so sector leaders is probably one of the best lists in IBD. That is. That's a phenomenal list. When the market's really good, this list gets big. When the market changes, this list gets small. This is a phenomenal list. I know some good traders. So all they do is trade this list.
Look at this XPEL up on the day, in mode up on the day.
Look at that. Yep. Yeah, look at that. Yeah.
Yeah. So I just do this because I like to start from a big pool of data. And then over here is where you build your screener and put in the parameters. So if you don't have MarketSmith, this is a great option. You can still get some of the features here.
This is great. This is great. This is phenomenal, actually. I didn't even know they did this.
Yeah. So look, you can do the smart select ratings, industry group RS. That's huge. You've got price conditions, volume conditions, whether it's a recent IPO, all of that, and estimates. You've got all of that. And to add a condition, you can basically just do this. Usually, sometimes they have a slider too. So if you only want stocks greater than 10, you do 10 as the minimum. Max, I don't know what stock that is, maybe Berkshire Hathaway, but and you just do save changes, and it will apply to all these. And basically, out of all the IB data tables, this is a pretty good scan that I think puts up some good names here. Pins, you got QFIN, which is the sector leaders. RH, another strong name. UI has been good. Yala, Zoom. 28 stocks out of 8,000, a pretty good selection there. Obviously, you can lessen the restrictions here, so you can open it up a little bit, but probably not for RS rating. You wouldn't want to do that. But yeah, I think this is a really cool tool.
Wow, this is like a MarketSmith Lite, but wow, this is all the main stuff is already here. Wow, this is great.
Yeah.
Oh, everyone. Okay. So.
And you got dark mode too.
That's nice.
Yeah.
Okay. Great. Thanks for showing that. This is something new. I never even knew they had this. Okay, so there is a question. I guess it's for both of us. How do you sell into strength? Any rules you can share? When do you sell into strength? How do you wrestle with the fact that you may be selling a TML that goes up 100%, 150, 200%? I'll let you start and I'll go in with that one.
Sure. So if I'm selling into strength, usually it's going to be an ad that I did initially. It's not going to be my core position. And I look for kind of a percentage above the 10 simple, the 21 EMA. And if it's above what it usually gets to, I maybe will sell that ad and then look to find another low risk entry, whether it pulls back on low volume, tightens up again, and I'll just add that back, add those shares. But I don't do it too much. But yeah, just trading around that core position and trying to get as much performance as you can through it. And selling a little bit into strength definitely helps on those pullbacks. Mentally, you've already sold some for a nice profit, and then you can sit until it like really breaks expectations through those key moving averages.
So selling to strength, there are a few strategies I do deploy. Sometimes I just sell half the position and let it ride the rest. Now, in January, I did have some really true market leader stocks. Some went up 60, 100%. I was selling them on the way up. I didn't care because I look at my probability on my batting average and how many trades I'm going to do throughout the year. So I do know my numbers. So once I know my numbers, I just like, all right, there's a lot of profit, move to the next trade. Because I do trade. I can trade, few times a week if I need to. So I do know my numbers on that. So I just lock profit and I try to compound it for the next trade. But but everyone's psychological makeup is different on this one. So if you feel you're on a good leader, Dan Zager, for example, sells 30%, and he let the rest of the position ride. I do that too. 30% sell, 30%, let it move up, goes up another 10, 20%. I would unload 30% of that position. So I would keep selling up on the way up because I don't really care if the stock goes up to the really high. My job is to get as much as of the meat of the trade, because I'm going to deploy that cash into another trade and compound that. And sometimes you could be in a situation like on Tilray. I actually had Tilray. I kind of mismanaged that trade before it had this kind of weird climax. I don't know what type of move it was. It happens. My position sizing was, I was on that trade right there around 26. I actually got the low around like 23, sold it up on like 34, but it kept going higher. It didn't really matter. I mean, I made some money and moved on to the next trade.
You avoid this.
Absolutely did. Yeah. Because you don't know when that's going to happen.
But it's going to happen. So
yeah. So let's do NVAX. I got that one of NVAX.
Oh, and NVAX, yeah.
Yeah. So now on this one, I was at all the way at the bottom at like 122 on this trade, margined up before the drop, before the peak, just before the peak. The bar below, no, all the way back. Pointed, no. Pointed before the gap up.
Before the gap up, around here?
No, all the way on the recent gap up.
Right here.
Yeah, I was right there. Now it's going up. I had a margin position. I was like, I'm just going to take some profit. It went up higher, but you don't know if it can turn, because it can turn. And the goal is you have to compare your trades with the entire market as a whole. I know the market's extended. I have a profit. I have to lock profit. Now, if the market's coming off of a correction on a rally, I'm going to hold the true market leaders as long as I can, because you have a much larger room to run. I hope, does that make sense? I kind of went a little complex on that trade.
No, I think it makes sense.
Because you have to compare where you are in relationship with the market sometimes, So, what's the other apps? I mismanaged this one last year. I totally did. This was a true leader by the book. I think I only got like 20% on this trade, and this stock just kept going up and up. It was
kind of whippy in here. It was a little hard to hold.
Yeah, but this is no, I didn't get it there. But this is a true by the book, CANSLIM, true market leader. And look at the RS right now. I mean, it's just this is a true market leader. Yeah.
And look at all these earnings gap ups. It respects the 21 EMA.
Yeah.
It barely undercuts the 50 here, and it just still going.
So the other thing is on true market leaders, after a long run, they do tend to, some stocks have character change. That's a very different topic, but that's a signal to unload the position at that time. For example, on apps, let's say you had this move while it's moving the 21-day and it breaks on the 21-day. That's a time, not this one, before. We're talking about it in November of 2020. Yeah, around that time is a time to unload a position if you had it for a while, and then let it build it up again. Because that 21-day is the support average. And once it breaks, you should de-risk the trade at that time. It's a character change. Mike Webster, uses that approach. And that's a good, pause time. And then you watch what the stock does. In this case, it repaired itself. And then you just, buy it again. Let's see, where's the chat? I think chat disappeared.
There's another question here. How do you trade during earnings? Do you require a certain gain percentage to hold your stock during earnings? I look at what my profit is, and if it's greater than the implied move, I basically decide then and there, am I going to hold half? Am I going to hold it all through? It also depends on the stock, my conviction, but really I do want to see a nice profit cushion to hold through earnings because it is a binary event.
Absolutely. I kind of sometimes go in with 10% profit. If I have 10% profit, I'm riding the earnings.
Right.
Anything below 5, the risk is absolutely against you at that point. The cushion's not enough. That's just, it is a binary event. Jim Ropel sells deep in the money calls for some overextended stocks. That's a question for Bob, actually. Bob, are you there?
He's getting up. I see him. I'll ask him to unmute.
Yeah, this is a Bob question because Bob is the options guy. Where is he? I can't see. Let me find him.
I asked him to unmute. I think
Okay.
you should be able to, Bob. Oh, there you go.
All right, repeat the question, please.
Jim Ropel sells deep in the money calls for some overextended stocks. Is there any strategy you use when you are concerned about stocks overextended from moving averages?
Am I concerned about stocks overextended? So he sells
Deep in the money calls.
So he's basically betting that the stock won't go down; it'll stay at least the same level. So I generally sell. I'm sorry. I'll repeat. I apologize. I generally buy call positions. So usually, what I do is I try and buy when a stock breaks out of a base. Cup with handle, double bottom. Any of the traditional bases, and so as I have a call position, as the stock moves up in price, I'm offensively selling that call and then buying the next in the money option. So when a stock gets overly extended, I'm not overly concerned because I've probably sold it a couple times and made money off of it. So again, it's kind of going in with the deep, selling the calls. He's kind of betting that, the stock won't go down as much. So I don't really have a concern when it gets overextended because I'm kind of following the same rules that you are. If the trend ends and it breaks to the downside, I just sell the call and move on. I'll give you kind of a good example. I don't know if Rich, you could share your screen or pull up IWM for me.
Yep, of course. All right, can you see my screen?
I can see your screen. So no, kind of go back. No, not too small. I'm sorry. So I think it's like November. See that breakout in November? Go a little further to your right. Is that November?
This is the start of November right here.
Okay.
This is December.
Okay, so probably it's somewhere in this range is when I actually started buying calls in IWM, probably on this breakout day. So again, you're watching it as it's hugging. Is that your 10 moving average, Richard, or your 20?
10.
This is the 10 simple.
10 simple. So see, essentially, this is riding your 10 simple moving average, and every time it goes up a couple points, I buy the call on the breakout. It breaks a little bit. I make money. I sell it in a couple of weeks. I sell that call. I buy another call, and then basically it just keeps going up. And essentially, like when it started touching the 21 day, I pretty much got out of my position. So I probably have 5 or 6 trades in there. I've made money on 5 of them and lost money on the 6th one. So I have, if you're looking at kind of your batting averages, you know, I've turned you know, a $500 trade into probably close to 3,000. Just, and it's just by buying and selling. It's just rolling in your positions.
And Bob,
So,
there's a follow-up to your own question is one person is asking, is that a covered call? And what delta do you buy?
no, it is not a covered call. So a covered call is as I'm going into the IWM example. You know, if I was buying a covered call, I would buy a call out something in the money, probably depending on how much I'm willing to risk, probably a 40 or 50 delta, something that's close to in the money. A covered call is where you buy one contract. You know, you buy one long-term contract that out several months, and then you're selling a call on the shorter term, something within 30 days.
Oh, sorry, Bob. What delta are you buying your calls at?
I usually I try and buy something that's in the money, so I would say, you know, a 40 or a 50 delta.
Okay.
But again, if the stock, you know, I mean, it's kind of tough to say, because if you're buying a call in NVIDIA that's trading at close to 550 a stock share, you know, a call that's a 40 or 50 delta is going to cost you $2,000 a contract, which may be probably more than what people are willing to spend. So you have to go a little bit lower on your delta. You know, something like IWM, which is trading at 200 a share, you can probably get a 40 or 50 delta contract for a reasonable price, you know, 500 or, you know, $600 a contract. For example, I could buy a covered call at app, stock at 78, sell calls against that. Yeah. Hang on, I'm reading this contract. And then sell calls. So Paul, are you buying 100 shares of apps at $78 a share? So you're putting $7,800 in, and then you're selling a call against that to get yourself what, like maybe $200-300 on that?
I think so. He said, yeah.
Yeah. So again, Paul, you know, on something like that, you're looking to get income on that, because you essentially, yeah, your upside is limited, because essentially if the stock price goes up, then your call contract that you're selling will expire worthless, which means you're keeping that money, but you'll probably get bought out of your stock on apps. So you would have a short-term gain on that. So, okay, so it looks like Paul is, if it's buying at a cheaper price, he's basically, I guess, Paul, you're probably going to buy back the contract if the stock goes up in price before you get called out of that position, or you get exercised on it.
Yeah, he said that. Okay, so is this for me? Anish, are you buying pullback around the key moving averages? Yes, at times. I could. I do trade little multi-style. So yeah, sometimes I do buy on pullbacks, and sometimes I buy reversals, and sometimes I just buy breakouts. Yeah, Charles Alvarez, he does love to buy pullbacks. He truly does. But I do look at my pullbacks to be orderly coming into the moving averages, not really sporadic and not as volatile. It actually has to come in a natural flow. And those, yes, absolutely. And sometimes if I miss a stock, and those are the places I would be aggressively buying my entire position. Do you know what Duckman means for having 3 reasons for a buy? What technicals is he looking for at for that? That's for you, Richard.
I don't know specifically. I think you'd have to go back to our to the interview I did with him. I think he talks about it there. I think he basically wants to have three reasons looking at the chart, maybe a confluence of moving averages, a prior high, basically multiple reasons that he should buy, and that kind of prevents him from just buying extended or buying at a bad position, bad spot.
So guys, we're gonna start. We got like 5 more minutes left. Any more questions for me, Bob, Richard, any of the meetup guys? Because in about 5 minutes we'll be wrapping it up. Okay. Okay. How do you handle gap ups? Do you wait for a base to form before you get in? Sometimes yes, sometimes I will buy the gap up. I will look at intraday charts and try to get the gap, and most of the times gap just come down and fill the gap, and I'm out of that trade. Gap is not all the time. I would not buy gaps all the time because it makes my price extended. If a gap up happens where the breakout entry is and it's within a normal price range, I would be buying it. But there is a little bit of art to it. If you miss a gap up, that's fine. I would just, because that stock is going to set up, and I'll just buy the next setup. So, Richard, do you have any examples on that?
It's hard to define your risk on a earnings gap up. I mean, I bought CrowdStrike on this most recent earnings gap up. I waited for the first 5-minute bar to kind of see the price action. It moved through that high. I bought a little bit more the next day. So that's kind of how I define risk, but it's pretty easy to get stopped out on these earnings gap ups. But I do buy them. Somebody's got a question about that.
What do you think is more important, skill to develop and learn to progressive? What's important skill to develop to learn to do progressive exposure well? Richard, that's a that's a great question.
It's kind of a concept that you have to learn. In terms of skill, I guess keep track of your trades, the results of the recent ones, journal, know whether you've got a good win or loss. Bob has an answer, so there you go.
Okay. Yeah, as far as the most important skill, and again, this is kind of going back when Anish and I did the, meetups in person. And I think Anish is even still has that slide as, you're looking to perform, I mean, you're in this to perform better than the averages. So I think the most important skill to have is ensuring that your risk is, you're not taking on too much risk, and that you are following all of your rules, whatever, and analyzing your trades to ensure that you are following your rules. But I think the most important skill is basically getting out of a losing trade before you lose a ton of money on that trade, because again, you take a big loss on a trade and it costs you a lot of money, and you really get gun shy to make the next trade. So you want to. I think, like I said, I think the most important thing you can do is when you place a trade is you have a stop loss in. And that stop loss is where it's not going to hurt your portfolio too badly if the trade goes against you. Because even on a day like today, where a lot of us probably took a pretty good beating on our portfolios. I know I did. We still have to go out there tomorrow and do what the market tells us to do. So. You don't want to put too much risk out there. It's kind of like, this is a long-term game for most of us, or we're looking to do this a number of years, and kind of the last thing you want to do is, and again, Mark Minervini talks about this, William O'Neill talks about this. But Mike West, all the traders, and they all talk about how at certain points they've blown up their portfolio, and they've lost, you know, a ton of money, and that's probably the one thing you want to learn is you know, how not to blow your portfolio up, and you want to have capital so you can trade again tomorrow morning.
Okay, so we're gonna start wrapping up this. I'm gonna wrap these last questions up really quick. Red day like today, how did you handle it? What stocks would you sell? What stocks would you hold? It all depends. You know, if a stock is not performing well on a day like this, I will absolutely unload it just because I know I have another stock in my queue. And so I would be planning that out. If a stock hits my the limits, it will be out. And if a stock is holding well, fighting the market, I'm up on that trade. There's no need to sell it. And then we will go with those topics on different presentations, because that question keeps coming up a lot. So we will address that in more depth. And a lot of stock breakouts and earnings. I think Richard answered that. He does buy the breakouts. Even I do buy the breakouts sometimes, but it's an art in there because sometimes they do reverse and I get stopped out right on the thing. But if a breakout is too extended, I will not be touching it. I'll just wait for it to give me a setup, which 99.9% of the time they do give you setups, and I will be trading the setup. So otherwise with that, guys, this presentation, I want to thank Richard. Thank you, Richard, for making excellent slides. I'm sure he's going to post it on Twitter about his links and stuff. And then we'll try to get you guys this recording. And then next month, I believe it's Ryan Fleming, another meetup leader. He's going to present for next month, followed by Bob. Bob is options guy. He's going to he's going to present. And then we also have Sanjay, and then we'll come back to Richard. I'll probably present later in the year. I'll have a big presentation later in the year. But yeah, thank you guys for coming. You guys have a wonderful evening. Thank you, Richard. Bob?
Yeah, no problem. Thanks for having me.